Hey you guys! Coin Bureau, the famous crypto blogger, showed 5 coins that he is planning to add to his portfolio. I studied each project in detail and found very surprising and fascinating facts about each asset, which Coin Bureau did not mention, or maybe hid from you. So I'll tell you about it right now! The first asset, Lido Finance, has the most powerful info break of the last 6 months, the Ethereum Shanghai update, which will happen on April 12, and will open the possibility of withdrawing $28 billion in ETH tokens from staking. How will this affect the LDO token? As Coin Bureau has picked up on, Lido Finance is the platform where more than 30% of all ETH tokens worth a total of $10 billion are staked. And it would seem that since it's the most popular Ethereum staking platform, the token should also somehow benefit from a future update. But Coin Bureau forgot to tell you about the weakest part of this project, namely the tokenomics. The LDO token is a voting token, which is only used for voting. It has no real value. LDO holders get no additional return for holding the token, and no dividends from the profits of the protocol itself. The way I see it, LDO is an empty token with no real value, an asset for speculation only. Maybe I'm being highly critical of LDOs, but let's take Uniswap, the largest DEX with cumulative trading volume of $1.4 trillion as an example. Uniswap is a native UNI token that is only used as governance. UNI has plummeted 90% from its all-time high despite the platform's development. As you can see, the success of the platform has no effect on the growth of the token. What our blogger didn't say either was that 87% of the tokens are in the hands of 100 addresses, of which half are in Lido Finance wallets. An asset can be manipulative and rise or fall for no reason. Even the coolest investors on board are unlikely to help a token get pumped, because they've already sold at a higher price. Statistics show that my viewers love charts, so I won't leave you without them. On a daily time frame, I see 2 zones of interest. Above $3 is a sell zone, and below $1 is a buy zone. On the 4-hour time frame, the price has approached the 200-day moving average. Historically, this average was a support, and now it is a resistance. Therefore, the LDO might correct strongly in the near term, even though it was a success. Guys, I just showed you why you shouldn't blindly trust even the big bloggers, but it's essential to do your own analysis. So, are you ready for the next Coin Bureau token breakdown? The next token Coin Bureau is considering for its portfolio is AAVE. It is also a token, but there is one very important detail that distinguishes AAVE from the useless LDO. AAVE is one of the largest and oldest lending platforms on the crypto market, with a total liquidity of more than $8 billion. It is a really top product that runs on Arbitrum, Avalanche, Optimism, Polygon, and other blockchains in addition to Ethereum. You can provide liquidity and get up to 10% in USDT, or borrow assets against other tokens. As I said before, AAVE is a management token that is used for voting and decentralized blockchain management. But the main advantage of the token is the ability to seed AAVE into a security fund and earn passive income and even a portion of the platform's commission fees. This allows the AAVE token to grow with the development of the platform, unlike LDO. But why is the token endlessly falling then? It's all about the initial allocation of the tokens. Early investors got about 77% of all tokens for just 2 cents, and even now that's over 3,000 X's. As you may have guessed, investors were buying the asset with the goal of making money, not voting. So the strong selling pressure led to a dump of the asset. Is the Coin Bureau right that AAVE is already down enough to start rising? I believe so, if the team redesigns the tokenomics. So I only expect a pump when AAVE launches its GHO stablecoin, and the AAVE token plays a key role there, which is generally pretty likely, so pay attention to this asset. Perhaps it will repeat Litecoin's pump after a long accumulation. Patterns like this are not uncommon, especially for old coins like AAVE. And in the second part of the video, I will take a look at 3 altcoins and give you some very important points that Coin Bureau missed in their video. Stay tuned! The next asset the Coin Bureau is keeping a close eye on is Arweave. The Arweave network is like Bitcoin, but for data. It's a permanent and decentralized web inside an open ledger. In November, Arweave partnered with Meta and Instagram. A year earlier, Arweave integrated with The Graph. I made a video about this project. Check it out. Arweave's technology can be used for AI, a topic that's trending right now and will definitely continue to evolve. The project has raised as much as $20 million in investment from major funds like Andreessen Horowitz and Coinbase Ventures. This points to support from the big players and possible future prospects. But to find out if the token has a future, let's look at its tokenomics. AR is the utility token of Arweave. All the fees within the Arweave network are paid in AR. Users who wish to store data on the Arweave blockchain must use AR to pay for distributed data storage. Also, computers on the network that offer storage services must accept their incentives in AR tokens only. The token plays a key role in this project, so if Arweave technology is successful, the token will also surge. And now moving on to your favorite charts. On the daily time frame, the price is close to the all-time low. This is where funds are likely to buy back AR tokens cheaply so that they can stock up and sell higher. At least, that's what I do. From the technical analysis perspective, now is a good time to buy. But remember, the only advice I give you is to do your own analysis of the project before you buy. The price has formed a triangle pattern on the lower time frame. Usually, such patterns break through to one side. I cannot predict where the price will go for sure, but it looks like the trend has changed to the bulls. The long-term selling targets for AR are at $40 and $75. These are the areas of greatest interest for sellers, so pay attention to them. So far, AR has interested me more than the other Coin Bureau tokens. Still, you should be very careful with the following assets. I found something really important that would make me not want to buy any of them. The tokens in question are Axelar and Thorchain, seemingly working products. What is the danger? Both projects are cross-chain solutions. This is by far the most vulnerable side of the blockchain. In 2022 alone, the projects lost about $2 billion due to cross-chain bridge hackings, according to Chainalysis. Even Vitalik Buterin, the founder of Ethereum, warned about the vulnerability of cross-chain technology. By investing in Axelar and Thorchain, apart from the cryptocurrency volatility, we take on the risks of the project hacking. Maybe you didn't know, but in 2021, Thorchain suffered a hack of $8 million, so the launch of the project was suspended. For 2 years, everything was fine, until a week ago when the Thorchain team reported about the threat, and the project stopped the protocol. So much for decentralization. There is no guarantee that the hack won't happen again. As for Axelar, it hasn't had any hacks yet, but the timeline doesn't look very convincing. So I would refrain from investing in cross-chain projects. Guys, please share in the comments which project you would like me to break down in my next videos and why. Maybe your comment will be the topic for the next video. Oh, and don't forget to subscribe to the channel, please. Thanks for watching your Coin Post.